I'm just going to share this in a couple of groups, and then we'll get underway. 1, 2, 3. What's that? 10 people. That's enough. The rest of them must still be watching. 9 now. The rest must still be watching Dancing on Ice. Okay. Just mute Mark out there. He's tapping away on something. Right, refresh. And we should get something in there. There we go. Oh yeah, I can see me and Ron. Lovely. Copy link address. Let's get this sorted now. One in there. Post. Where's the other one? Where's the other one? Is there? Okay, that's the technicals taken care of. Just take us a few minutes to get that set up. Like I say, I've got to keep inputting it every time. All right, welcome everybody. It's Sunday. I hope we've all had a fantastic weekend. I know we're all excited looking to the week ahead. The market's open just under a couple of hours' time at 10 p.m. in the UK, 5 p.m. Eastern Standard. Oh yeah, Love Island finals on. John, yeah, you're right. Love Island final tonight, that's on at 9. So you should still be able to catch that. I should be off here by then. So you can go and catch that. Yeah, that's really exciting, that. I know my wife's watching it. Let's see. Yeah, Love Island filing, yeah. Yeah, you're right. Do not watch TV. Yeah, that's very sensible, that, John. I don't watch too much of it myself. What is Love Island? Okay. All right. Let's get the show on the road. All right, guys. Sunday, markets are opening in a couple of hours' time. If you do any sort of preparation, or if you don't do any preparation at all, what I'll do is I'll basically just cover a couple of things, what I've done before, just to give ourselves a reminder of what's happening. I'll share my screen with you. I'm just going to get a couple of things up here. Just need to move that over there. We can get this going. So have we got a plan? Have we got our plans in place? Have we thought about what we're going to do next week or in a couple of hours' time? Or are we just going to use the scattergun approach and put every trade on that comes our way? Are we going to do steady, Barley, bankers, John Doherty's, BYOB, 25 for life? What are we going to do this week? You need a plan. You need a plan. That's what I'm saying, guys. You need a plan when you start this. I'll just just as you're joining us, I know it's Sunday evening in the UK, Sunday afternoon elsewhere across the pond and things like that. But just maybe if you're multitasking, it's something I'm very poor at. I can only do one thing at a time. But if you're multitasking, i.e. doing some housekeeping, vacuuming, doing the dishes or anything like that, petting the dog, or watching your favorite TV program while you're watching this. Unfortunately, I can't do anything like that. Like I said, I can do one thing at a time. If you can just mute yourselves as you come in, as you join the meeting, Of course, you can unmute yourself at any time if you want to say anything. That's not a problem. But we do tend to get a lot of background noise, so you can just mute yourselves out. And of course, we are streaming live on Facebook, and we don't want to get a ban. So if you're on video and you're in various states of undress, just remember to switch your video off as well, because you know, this is getting streamed in 2 or 3 Facebook groups, and we don't want people seeing what underwear you wear and things like that. Right, so let's I'm just going to share my screen with you, and we'll get this on the road. Let's go. It's Ron. It's got the dog. Okay, right. IML. IM Academy. Let's get this up. I'm normally quite prepared, but I'm quite excited today, actually, everybody, because it's the end of half term. For those of you who don't know me or tuning in for the first time, I do have a couple of grandchildren who live with me, and they haven't been at school all this last week. So my wife and I are really excited for tomorrow. At our age, we're in our late 50s, so we're really excited to be taking the kids back to school tomorrow. Really looking forward to that. The kids aren't, by the way, but we are, so we can have ourselves a little break. Right, where's it at? Where's it gone? I'm looking for you. Well, I'm waffling on. I'm just trying to look at this there. Just come up. What's happening? Can we all see that? Can we all see the Wall Street cheat sheet? Lovely, great, super.
Yes, can see that, nice.
Excellent, lovely. Now, some of you may not have seen this before, but if you have, just bear with us because it's really, really important. Just a little bit about the psychology and maybe some of the feelings that you will experience if you haven't traded before, or maybe some of the feelings you still experience, particularly if you're maybe scalping or holding on to trades a little bit too long. This is freely available on the internet. If you want to get this and maybe print it off and have it in front of you, I've got it on my wall just above my monitor here. But I think it's really important we understand this. This is the Wall Street cheat sheet. Just Google that and go on to images, and you'll be able to download it and save it, and you can print it off. But I think this is really, really important because these are some of the emotions we experience. And one of the biggest problems we have as retail traders is controlling our emotions, keeping them in check, particularly when we are trading, when we get excited, when we win, and we get really disappointed when we lose, particularly if we are over trading, over leveraging, using bigger lot sizes than what we should, and this is a big part of it. So if you've never seen this before, this is a typical chart here, typical market cycle, really what you would see, and these are the emotions and the feelings, what you would go through as the market fluctuates, and it is a cycle, right? It is a psychology of a market cycle, and this is the stuff that goes through your mind. You might not be aware of it, but I do, and I've said it before, it is really important that you understand this and keep control of it, really. I know there's in the unit section in the Ninja group, we've got a few books in there that can help with mindset, trading in the zone. I think it's one, Mark Douglas, there's a couple others in there, but they really are worth reading and getting your head around all this sort of stuff. because this is going to be your biggest battle, right? It's not the trades, not the strategies, it's not learning the strategies, it's not learning BYOB or 25 for life, snipers, bankers, anything like that. They are strategies. They're quite easy to learn. Once you've done them a few times, you can grasp them. Your biggest problem, or our biggest problem, is our emotions and controlling them and not getting too excited and carried away and sticking to the plan, right? So you know, is that when you get involved in a trade, if we start at the top, or really at the bottom here on the left hand side, and it's basically when we get involved in a trade, and what I'll do is I'll start at the optimism bit, because that's when we enter trades, we do have a level of optimism, because every trade we enter, we actually believe it's going to win, right? When we enter a trade, we believe it's going to win. If you've done your analysis correctly, if you follow the strategy and you know when to get into the market, when to enter a trade, you've done all your analysis, you've done your support and resistance, everything else that goes along with it, you're following the strategy to the letter, you will have a level of optimism that this trade is going to win. And this is one of the first emotions you'll experience. And as the trade goes on and gathers pace and starts going into profit, you get this belief that's actually, you believe that, you know, you've done the right thing and it's going to win. And if you're scalping and you're going for 10 pips, you hit your 10 pips, you have this belief. You know, yeah, this is working, this works. You get that first one, it works, this, whether it's on demo or even if you're using trading live, you tend to get the belief that it works, and it does work, but you tend to have a little bit of a thrill as well when it's won. You know, and you maybe tell everybody or tell other people that this works and this is what you're doing and stuff like that. It's easy. You just need to get into this trade and follow the system. Just having a cup of tea at a little bit thirsty. I've been out in soft play centres all day today and stuff like that with 4 kids. So I'm just trying to relax now, trying to mellow. And when it wins, you go through, you get this thrill of winning, which again is a really big emotion, and you want to get involved. And this is what happens now in our group, in the Ninja group, where there's lots of different things happening. There's lots of different trades available, and we tend to want to trade or take all the trades that are coming our way. And this is when we can start to over leverage without realizing it. Maybe have 4 or 5 trades open, which you may well be trading. Let's just say you're trading 2% of your account, and you have 4 or 5 trades open, and you're basically risking 8 to 10% of your account, because you believe that if you take all these trades, they're all going to win. And this is the thrill bit. This is where you get more on margin. This is where you tend to over leverage. What tends to happen is it goes your way, and you have this. You do feel quite euphoric, and you can see that in a lot of the comments and messages in the chat group and stuff like that when people are winning. It's really good to be part of the group and think, yeah, this is fantastic. This is great. We're winning, everybody's winning, or you may be thinking other people are winning, why aren't I? And what tends to happen when you reach that level is you do get a little level of complacency, and you may well start to hold on to trades longer than necessary, particularly if they are swing trades or the longer term trades rather than scalping, where you just go for 10 pips. But you do get a level of complacency. And what tends to happen is maybe you might get a little bit of drawback or pullback, sorry, you might go into a little bit of drawdown when you up maybe 10, 15, 20 pips, and you get that pullback or retracement. and it goes into drawdown, and you're thinking, yeah, it's just a pullback. It's going to go back up. Then it doesn't, and you may well have made a mistake, i.e., you may well have got into a trade and you might have forgot to put a stop loss on, which does happen. People do forget to put stop losses on. Or you may be trading without a stop loss, and you may have belief that this is going to turn around, and then you do have this little bit of complacency, particularly after you've had a few winning trades. And then what tends to happen is that trade gets further and further down, and you start getting anxious about it. You start seeing that your bank is in a lot of drawdown. You may be 10-15% in drawdown on your banks and on your account, and then you may see you may be posting messages in the chat group and things like that saying, can somebody have a look at this currency pair for us, because I took this as a trade and I'm now in drawdown and I'm getting a bit anxious of whether I need to close this trade out or not. So this is again one of the emotions you're feeling of anxiety. You then go through a little bit of denial. Again, this is a generic thing. So this is my investments over great companies that'll come back. And I've done this. I'm speaking from experience here. I've been all through this. You get to the position of denial where you're saying, well, this is going to turn around and going to come back. And I've got to tell you, in Forex markets, you can, if you've got enough money in your account, you can hold on to a trade that goes into a big drawdown, and eventually it will turn around at some point, but it might not be in the next day. It could be in the next month, it could be in the next 3 months, it could be in the next 2 years or something like that. But they do eventually come back at some point, right, to where you're getting close to maybe where you can break even and get out of it. But you do go through this period of denial where you actually think that it's going to turn around and it's going to come back up. And again, you hold on to these trades too long. And then, of course, it keeps on going down and you end up panicking, and you need to get out of the trade, really. And you end up closing the trade, which is the capitulation point where you get out and you say, I can't afford to lose anymore. Or in some cases, people have blown their account altogether. It's just like they've run out of money in their account and it's gone. And they start thinking, this doesn't work. This trading thing, it doesn't work. You start feeling anger. Why did this happen? Whose fault was this? Who called this trade? I've seen a few messages from people who've done trades with different people, and they've said they don't work and they're not going to do them anymore and things like that. And then it moves along and you end up getting a little bit depressed. Maybe you've blew an account and you've lost a lot of money, and you start feeling a little bit foolish and you start thinking, I'm not going to do this again. And what happens is you end up either stop trading altogether, or you go away and you have a little sulk and you have a little think about it, and you have some hippo time and you wallow in a little bit of depression, and maybe you can pull yourself around, or you maybe need to get to a stage where you can build your bank up and get some more money and put it into account and start again. And then you go through the cycle. It starts again, starts going up. You got a little bit of disbelief. Maybe it starts rallying again. I mean, this is aimed at long-term traders, but it happens on all trading, really. You'll see a trade and you see it go up, and then you just go through the cycle again. It's really, really important that we understand all about this, all about how we can hang on to trades too long, how we over leverage, all the feelings we have of anxiety, thrill, euphoria, panic, disbelief, depression, anger. You'll go through all of these, and this is a thing what we all go through. But what we have to do is we need to understand this, and once we understand it, we can control it, and start sticking to strategies. Start not over leveraging. Start not taking every trade that comes our way. And what you'll find is the less you trade, the more your accounts will grow. So what you really need to do, and we are looking ahead, is you need to get a plan together right? You need to get a trading plan together. Now that trading plan is specific to what you want to do. My particular trading plan is really quite simple. I do BYOB. I sometimes do the scalping, but I mainly go for longer term trades on the higher time frames, usually the 1 hour. And I tend to use the harmonic scanner. I don't, it's not too often that I use vibrato now. I don't follow anybody who does steady or any of the bankers or anything like that. I just tend to stick to the harmonic scanner, and I get most of my trades from there, and I am more than happy doing that. I do take some BYOB trades, maybe do some scalping at 9 o'clock in the morning, sometimes UK time off pole session, but I don't really do it as a rule of thumb. Now, when I first started with the academy, I was doing Boyd's pips. I was doing ECC 11. I was doing everything. I subscribed to everything. I had them all. I've done all of them, every single one. I've done DeLorean. I've done Gold Cup. I've done levels. I've done pivots. I've done them all. I've subscribed to them all. And what tends to happen is you start to stretch yourself really, really thin. And the more different strategies you take on, and the belief that you think that they're all going to win, the more you over leverage and the more money you will lose from your account. What you need to do is you need to pick one strategy or two strategies at the most and follow them two strategies. If you're doing two strategies, you need to divide your account into two. And you can do that quite easily through your broker. You can set up a sub account and you can divide your money 50-50, and you can use two separate accounts. They're totally separate, and you can use one for BYOB for scalping if that's what you do, or you can use one and use the other one for 25 to life if that's what you do. But I don't recommend that you use any more than two, particularly if you're new. Somebody's in the chat there. So there's what I'm getting from this cheat sheet. Make your plan, follow it, use proper risk management, stay disciplined, stay on only one strategy till you master it, stay within yourself, trade on emotional. That's exactly right, John. That is exactly right. That is what you need to do. It's great. Grasping that, it's a little bit more difficult to follow that and stick to it, because when you have success, when your account is growing, when you're winning trades, it's very, very easy to take another trade. Yeah, I'll just do another one. I'll just do another one. I've done it myself. I'll be honest and upfront with you. I've done it myself, and this is why I'm talking about it. I'm speaking from experience. I have hit 15% in one trade by 7:30 in the morning, and I have gone on to trade the rest of the day, and I have lost that 15%. And then I've gone to where I've actually lost 3% of my account that day, sometimes 6% taking another trade. What you've got to do is you've got to be really disciplined. You have to set yourself the target, and I know Paul often refers to it on the compounding sheet. That 3% a day is really, really important, whether you do 10 pips, 20 pips, 30 pips, whichever way you do it. As long as you stick to your percentage, right? Your percentage, right? Of what that is what grows your account, and you compound that. It's not about the pips. It's not about the pips. I can put a post on and say I did 75 pips on Friday. But it's not about the pips, it's about the percentage, because if you go for 3% and you use proper risk management, get your lot sizes correct, that's 75 pips. What I did is, when you work it out lot size wise, it will be 3%, as long as you're not risking any more than what you're prepared to lose. So if you're risking 2% or 3%, that's what you do. Use the proper risk assessment, risk management, use proper leverage, and you'll be fine, and you'll see that your account will grow a lot quicker than what it actually does. Right, let's have a look at this. John, I see markets. Yeah, they require $200. They certainly do. $200 to open a live account. John, are you in the US? Are you over there in America? Because I'm not sure which is the right broker to use over there. We're talking about brokers. There is a few brokers out there. I can only speak from my experience in the UK. There's brokers in the UK. You can open accounts with $10. You put $10 in and you can start trading with that. UK rather than America. Yeah, I mean, okay, John. In the UK, there's lots of brokers you can use, but they have recently changed it for all new traders. So if you open a new account, you're going to get a leverage of 1 to 30, roughly 1 to 30. If you say you've got some experience, you may get 1 to 100. There is some brokers out there who might give you 1 to 200. You can get by with that. You can get by with that, but all it means is you have to go for more pips. So instead of, if you've got a leverage of 1 to 500 on your account, that means you can go for 10 pips and get 3%. Right? With anything less than that, well, I think it's 1 to 300 or less. So if you're doing 1 to 200 or 1 to 100 or something like that, you're probably going to need to do 30 pips or more a day to get you 3% based on the leverage. If it's 1 to 30, you're going to struggle with 1 to 30. So my advice is, if you're in the UK, I use IC Markets, I use Hugo's Way, I use Wanda. Wanda is 1 to 200 on mine. The leverage is 1 to 200. It's very safe. Very safe. You can't over leverage. You can't do more than two or 3 trades at a time. You can't do more than 2 or 3 trades at a time with that. 1 to 500, you can do a lot more. You can, this is where you can start over leveraging with 1 to 500. So you do have to be careful. There's a reason why they limit the leverage on some accounts, particularly if you're new. But yeah, you can, I can't recommend any broker specifically, but there is brokers out there, John, where you can open an account with $10, particularly if you're in the UK, and you can start trading with that $10 basically. But the leverage can be quite small. You're going to struggle with 1 to 30. You need at least 1 to 100 to get anywhere. 1 to 500 preferably. Okay, that's the best I can do with that. Right, so where was I? Right, yeah, trading plan. So yeah, my trading plan, I keep saying I'm going to type this up, I've just got it written down in front of us, so I can't really share it with you, but what I've just spoke about there on the Wall Street cheat sheet, the psychology of the market, the feelings we all experience and things like that, and I still get them now. It's just you need to control them, and I'm getting really, really good at it. I do have losing trades. I had a losing trade on Friday where I hit my stop loss, 19 pips stop loss, but I didn't get emotional about it. I didn't really think about it. I just looked at the trade and I just thought, because I'd done the analysis on that particular trade, I just got in a little bit too early. So I got back in on the trade because I knew it was going to go in the direction I thought it was. And it did. I'd done the correct analysis on that, and it eventually went the way I thought it was going to. I just got in the market. I just got in a little bit too early, and it went against us. So I just waited, and I got back in a little bit later that day. And all I did was because I was in 2 trades that day. All I did for that one is the stop loss one hit me 19 pips. I doubled the lot size on that, and I went on and did 20 pips and I got me 19 pips back plus a little bit more, so I made about 10 pips in total on that. So you know, it's like just remaining calm, don't panic. If you do your analysis and you do get in a trade and it goes against you and it hits your stop loss, you know, you maybe sometimes, you know, you just maybe got in it just a little bit too early and it haven't finished its you know, the buyers or the sellers hadn't exhausted yet. So, you know, you maybe just got in a little bit too early, and I do that sometimes. I've done it a few times, and you just wait and maybe monitor the trade and just see if it's going to go your way, and you can always get back in when it looks like it's going to go your way, and you can get back and do it that way. A lot of people, when they lose a trade, they think that's it. I've lost the trade, that's it. I'll have to go and find another one, and then, you know, they'll go back to it or maybe check it, and they'll see that it's gone the way it went, and they'll see, oh, you know, it turned around and went the way I said it was going to go. And it's just a little bit of understanding how the markets work sometimes. Sometimes, you know, there's a thing called a stop hunt, maybe where you see the market moving quite fast and you have candles, you know, buy candles or sell candles that move quite fast. Maybe on news and things like that, or even just moving, the market starts to move quite fast. And it might hit your stop loss, and then as soon as it hits your stop loss, it turns around and goes back the other way, which is where you want it to go in the first place. So it just maybe needs a little bit more analysis on that. But yeah, so you know, you need to get your mindset right. So if you're planning on trading tonight, and we will touch on it, it's 20 to 9 now, so we've only got an hour and 20 minutes to go before the market's open. So if you're planning on looking and doing some trading tonight, I just want to, this is the sort of thing what you need to be looking at really, is the mindset, which I've spent a little bit of time talking about, is you need to really get right with that. You need to be in a good mood as well. If you're going to start trading, you want to have the right frame of mind. You need to be in a good mood, and you may well just want to play some of your favorite music or anything like that, some music that gets you going. You might want to listen to motivational tapes and stuff like that, what people listen to. Looks like there's a few people getting ready for the Love Island final now. But you know, you may want to get yourself in the right frame of mind. You've got to do that, right? And then again, you want to look at your trading style as well. And this will develop over time. It will change. Most new traders, when they start trading, they tend to scalp, but some people prefer scalping. We do have traders in the Ninja group who prefer scalping, maybe just go for 3, 5, 10 pips at a time, and they like doing that. I've tried that, and I don't think I'm suited to that. Actually, there's a little test you can do on baby pips. If you go to babypips.com, there's a quiz you can do on there, and it tells you what type of broker you is. Tells you what type of trader you may well be, and ask you some questions which are got nothing to do with trading. It's quite clever how they do it, but maybe it's a little bit of fun, but it can give you a little bit of an insight. But if you want to get really serious about it, Trading in the Zone by Mark Douglas, there's a questionnaire you fill in at the start, and when you finish the book, you fill it in at the end, and you can see the difference there, and you'll be able to recognize what type of trader you are. But you need to understand your trading style, and that may well involve you know, whether you are a technical trader, which is looking at charts, analysis, looking at structure, looking at support and resistance and things like that, or you may be a fundamental trader, which is the news, which is maybe looking at news and what's going to happen on the news. And this is the week ahead, so yeah, we'll have a look through this and see what's coming up through the week. Or you might do a little bit of both. Us as ninjas, we do both. The technical side of it is more probably 25 to life is a little bit more technical rather than BYOB. BYOB cash out is more of an reversal in the trend type strategy. where you're just looking for a reversal in the trend and you're getting 10 pips and then you're getting out. 25 to life is a little bit more technical, basically, because you're looking for higher highs and lower lows, as John says. But we've got the harmonic scanner to tell us that, which can point, the D point will point at the higher high or the lower low. So we've got that to help us. And of course, we do look at the news as well. We tend not to trade around the news. We are very aware of red flag news and maybe orange flag news that can have impact on any currency pairs we trade. So your trading style may well develop from that. I know my trading style has developed from when I wouldn't trade at all, an hour, 1 hour, either side of any red flag news. I wouldn't do that. But now I don't mind trading the news, particularly if I've done some analysis. And I think the news is going to be used to move the market in the direction I think it's going to go in. So I don't actually mind that too much now. So I tend to use that. I tend to use the news. So I do a little bit of technical and I do some fundamental as well. And then, of course, there's the impact of other news. Coronavirus is the big one. Job losses, things like that. This can all have an impact. This is stuff that we can't see. I just muted somebody out there. So that can have an impact on us as well. And the other news, which is totally unexpected, which happened to me last week on a particular trade. It wasn't expected and it went against us, but it came back. This is why you see these swings sometimes in these candles. I think it was the HSBC news saying that they're going to get rid of 35,000 jobs. Right, so there's another thing as well what you might want to be looking at. Yeah, you're exactly right there, John. I'm just having a look at the chat here. Yeah, Phil's gone. Yeah, John. Yeah, the speaker said many so-called professional traders are broke because they focus on getting 100% of the trade movement. Yeah, well, we're not greedy, we just get in and out. Well, it's very important in trades that you have some trade management in there as well as part of your trading plan. Now, that might be using our excellent exit manager. Just something as simple as that, setting that up and letting that manage the trade for you. Or it could be putting a trailing stop on. You could use a trailing stop, and you will have take profit 1, take profit 2, take profit 3, things like that. I know when I do a trade, I have an idea of where I think the trade's going to go. That's the maximum. But what I do is I normally put a trailing stop on, or I use exit manager, and just use that. If the trade goes against us, it hits my trailing stop. That's it. Sometimes I get back in if I think it's got a little bit way to go. If I'm looking at the market and think it's just maybe a retest, I'll wait till it's finished or a pullback, and I'll wait till that's finished, and then maybe I'll get back in and continue with the trade again. There's nothing to stop you doing that. And I've done that before where I've had 2, 3, 4 trades out of one currency pair. So you can certainly do that. And you're exactly right what you say there, John. 70-80% of the price movement, you'll stay in profit, yeah. That's why we have trailing stops. That's why we've got a thing like the exit manager, which you can apply to your MT4 platform, and you can use that to manage the trade. You can move your stop losses to break even or break even +1 or +5 and stuff like that. I mean, I do all of that as well on some of my trades. So I do use them, and that is the trade management. Again, that's your trading style. I'll just touch on currency pairs because some of you might not be aware of the sessions we have. We do have different sessions. We've got the Asian session, which starts tonight when the market's open, 10 o'clock. That's the Sydney session, 11 o'clock. Tokyo opens shortly after that. So we have the Asian sessions, which are normally pretty quiet. And I did see somebody mentioned in the chat today about a particular currency pair, GBP USD, on the scanner that it had, I think it had hit the 25 to life on Friday. It had hit the sell limit or buy limit. I can't remember which one. I think it'll probably be sell limit. Yeah, it's sell limit. And should they get into the trade tonight, you could certainly do that. But what I would say on GBP USD, it is not in session until 8 o'clock in the morning UK time. You might see some movement on it around about 7 or a little bit earlier when the German DAX opens at 7 a.m. You might see some movement on it then. But I would probably just wait and hang fire a little bit, because it may go into some consolidation in the Asian session. You may find that when the session opens at 10 o'clock as well, and I'm in the UK, so I keep referring to UK time, so you'll have to pardon me if you're over in the US or anywhere else in the world. But when the session opens as well, you may find that the market may well open with a gap in the market. So if I look at GBP USD, it's currently on something like 129,665, 655 or 565, something like that. I can't quite see it. You may find that market may well open up with a gap, and maybe, you know, what I mean by a gap is there may be a gap of 5-10 pips on that price when it opens, and what tends to happen is it'll come back and fill that gap up at some point. And the gap is caused mainly by maybe some news over the weekend that could affect that. And you know, the price is going to move a bit. So if there's been any positive news on that particular currency pair, it might move. So you're probably best off waiting. You don't want to be jumping in this trade at 10 o'clock, particularly if you're doing 25 to life, and maybe you've just got to yeah, all right, Jane, yeah, no problem. If you've got a 25 to life trade or thinking about getting in that, and the market does open with a gap, but I was going to say, if you've got a particularly short stop loss on, maybe 6 to 8 or 10 pips or something like that, you may find that when the market opens and there is a gap, it'll hit your stop loss straight away. So you'll be out with that trade. You maybe lost your 10 pips or something before you've actually done anything. So you really just want to just give it a chance and let it settle down. But you know, personally, I think probably on that particular currency pair, I mean, I haven't got a crystal ball, but I think, you know, you're going to see the most movement on that around about 7, you know, roughly about 7 a.m. UK time, or when the London session opens. And of course, it is out of session as well, like I've said. So maybe if you are looking at trades tonight and you're using the harmonic scanner and you want to look at trades, and maybe you want to get involved in one, just maybe stick to some of the Asian session pairs, which is JPY, Japanese yen, or AUD, Australian dollar, or NZD, New Zealand dollar. Maybe look at them types of currency pairs tonight, just to give you a little bit of heads up, because you may see some movement on them. Although I've got to say, looking at the news, there is a Japanese bank holiday Monday. So it is 10 to 6 in the morning in Japan at the moment. So it's a bank holiday there. So I would say the JPY pairs are going to probably move maybe a little bit slower, because there's no Japanese banks open tomorrow or now. In a couple of hours' time, they're not going to be open, so you're going to maybe see the markets are going to be really moving a little bit slow tonight. So just take that into account as well. So all this, you know, you need to consider when you're getting involved. London session, as I've mentioned, 8 o'clock. Normally, you'll see some price movement. 8 o'clock, you'll see some movement a little bit earlier. 7 a.m. normally, sometimes, particularly on the Euro pairs, but it can affect the GBP pairs as well. So for London session, it's GBP, Euro, and Swiss franc, those type of pairs. And then, of course, you've got the New York session, which opens at 1 p.m. UK time, which is 8 a.m. in New York. And that normally involves the US dollar and the Canadian dollar and all the pairs that's linked with that as well. And you do get that crossover as well, because the London session is still open. So you get that crossover as well. And if you like to trade gold as well, gold's probably a good time to trade, maybe in the afternoon rather than the morning. Just, because there'll be a lot of people trading that because it's done against the US dollar normally. So there's things like that you need to consider as well. And I've just mentioned there the sessions, so the time and stuff like that. So you need to consider that. Ideal setup, that is basically market structure and things like that. So with a 25 to life strategy, if you're going to use that one in particular, you don't really need to worry too much about that, because you're trading from high points and low points. The only thing you need to worry about is when to take your take profit, where to set your take profit and things like that. The 25 to life obviously gives you a stop loss and stuff like that. But I think there's some hang on, I'm just getting a few messages through that's distracting us. But yeah, things like that, you need to look at market structure and maybe look at where you're going to take stop losses and where you're going to take profit and things like that. And of course, your compound plan, there's different plans out there now. Some people, what we work off at the moment is the compound plan, where you compound your bank 3% a day, and you compound it that way, and you don't touch it for 3%. Some people might only want to do 2%. It just depends on your attitude to risk. Bear in mind, if you trade 2%, that means you have to have 50 consecutive losing trades to blow your account. Whether that's $100 account or $100,000 account, you have to have 50 consecutive losing trades to blow that account. So with the strategies we've got and we use, that ain't going to happen, particularly if you just stick to 25 to life and BYOB. There's a clue there, 2 strategies to use. There is other compound plans out there as well you can use. So maybe you want to draw some money out on your account and you don't want it to sit there. Obviously, if you draw money out on your account, it's going to take longer for that to grow. But at the end of the day, some people may well want to, if they start with $1,000, $2,000 account, they may well want to draw some of that money out every week or every month or something like that. I've got a compounding spreadsheet, which, if anybody's interested, I'll certainly share that with you. You can take a look at that. That's based on going for 5% a day and maybe drawn out 10% of that a week. If you want to start drawing a wage, if you like, so you can do things like that. But if you're interested in stuff like that, where maybe you want to start drawing money out of your account, you can certainly do that, and you can still grow it as well. It just depends on your attitude to risk, whether you've got a good strategy in place, particularly if you're going for 25 to life, where you may be going to go for 1 to 2 risk to reward, rather than BYOB, which is normally 1 to 1 at best. But if you're going for 1 to 2 risk to reward, where you're risking maybe 2 or 3% to get 4 or 6%, it'll certainly work with that. So you need to you need to take that into consideration as well. And of course, there's money management, which I touched on earlier, about hanging on to trades too long. You should never let a winner turn into a loser. And what I mean by that is manage the trade. Yeah, John, what I'm saying is, John, I've got spreadsheet, a compounded spreadsheet you can use if you want to draw on your account. Obviously, it's going to take you longer to draw that, but I know some people don't want their money sitting in the account, or maybe they don't want to. Maybe they want to draw a wage from that as they're making the money. Maybe they want to take 10% out a week or something like that. You can certainly do that, and you can still grow your account. Like I've said, it'll take a little bit longer. You won't grow your account as quickly, but it may make you feel better if you start with maybe a $500 account, and you can draw like $70 out in the first week, just by following maybe a couple of strategies, and you can draw $70 out a week. And as that grows, you can draw and compound. You can draw a little bit more, a little bit more. But you know, it's your account, you know, and it's up to you how you manage that account, and how you want to, you know, how you want to, like I say, how you want to manage it, whether you want to draw out or not. It grows quicker if you don't. It grows even quicker if you add money in. But I know some people out there maybe won't be in the position to do that. They just want to, they can only afford to put so much in. And from that, they maybe want to start drawing some money out as well. And there's nothing wrong with doing that. You just need to know how to manage that. All right. So I've got a few in there. Yeah. So what I'll do is I'll only give it to the people who want it. I'm not going to make it public. Yeah, you can certainly do that, John, once you build it up. John's saying he's plans to get 8,000. I want to have a mountain chicks and just £600 a week out. Yeah, you can certainly do that, John. My take on all of this, right, is when you look at that compounding spreadsheet and you think, wow, 3% a day, if I start with $500 and at the end of it I'm going to have $500,000 in your account. I think from a marketing point of view, it's great to show that to people, but really, John's pretty much hit the nail on the head there. My idea or my plan is to grow my account to $10,000. It's not at $10,000 yet, but once it gets there, which will be quite soon, once it hits that $10,000 or £10,000, whichever way you do it, my account's in dollars. It just makes it easier for me to work it out with lot sizes and stuff like that. My plan is once I get to $10,000, right, you split your account into two. You have a $5,000 account and another $5,000 account. The one $5,000 account, if you follow a good strategy, which we have, and John's alluded to that there, 10 pips a day at 3%. If you do that, you should be able to use that account as an expense account or a salary account, if you like. You'll be able to draw at least $3,000 to $4,000 a month from that and use that to live on. Now, I don't know about you, but $3,000 to $4,000 is quite a lot of money, and unless you're living some sort of lavish lifestyle, you can live quite comfortably on $3,000 to $4,000. I mean, you know, $750,000, $800,000 a week. I'm sure you can live quite comfortably on that. And the other 5,000, you just leave it, put the same trades on, and you let that one grow. And that becomes your main. That becomes your pension account, if you like, where you don't touch that one, and that's the one that compounds and compounds and compounds. The other one's going to stay around about $5,000, and what you're doing is you're just trading on that $5,000 all the time. You don't have to draw that out. That's what I'm saying. You can leave it in and let it grow. You just, you know, don't draw $4,000 out a month if you don't need it. But it can certainly help you. It's there for you to use that. So that's what I would do there, John. I know what you're saying there, but I would split it into two. Once you get the $8,000, split it into two, 50-50. Use the 4,000 for drawing your weekly money out, and the other 4,000 leave it where it is and let that one grow at 3% a day as well. So yeah, you can certainly do that as well. So, you know, from that point of view. And again, just getting back to what I've said is right at the very start, it's discipline, right? Oh, it's controlling your emotions, it's discipline, and sticking to your plan, sticking to your spreadsheet, sticking to your compounding plan, whichever one you choose, sticking to your strategies. Don't take every trade that comes your way. And I know Paul Turner said this, is that we've got some fantastic people who give trades out. We've got John Doherty, we've got Barley Granville. When you follow those trades, and it's great when they win, but you know that when those lose, you feel a little bit peed off about it when they go the wrong way, because you're thinking, why did I take that trade and stuff like that, you know. So stay in control, stick to one or two strategies, master those strategies. We've got two great strategies, BYOB, and we've got 25 to life, and you can use both of them on longer time frames. There's no excuse really. If you like to scalp, you can scalp with BYOB. If you're at work and you can only trade at specific times of the day, i.e. in the evenings or early mornings, you can certainly use BYOB and 25 to life to find trades, set them up, set alerts and sell limits or buy limits orders in the market, so when they hit a certain price they'll trigger for you, and then all you have to do is manage that trade once you're in it, and that just means moving stop losses and stuff like that, which you can easily do from your phone. Yeah, he's exactly right. He's exactly right, John. Yeah, of course you can do that. 1,000 in an account and 15% a week. Yeah, of course you will. It's brilliant. Yeah, so John's just saying in the chat here, for those of you who can't see it, he spoke to Barley Granville, told him about one of the goals he's got, to build an account up to £150,000 and buy a park home for cash. We supported that goal and said start with 1,000 in an account, you earn 15% a week, within a year you'll have 150,000, and it can happen even quicker than that, John. It can happen even quicker than that. But he's exactly right. Taking into account losers, any losses and days off. So it's all there. It's all available. It's all available to us. All we need to do is conquer and master, conquer our greed and our fear of missing out. Become masters of discipline, really. And you know, I'll always refer to what Jim Rohn once said, and I've got it stuck on my wall here, and I keep reading it. There's a couple of things he said. We must all suffer from one or two pains, and it's the pain of discipline or the pain of regret. And the difference is discipline weighs in ounces, while regret weighs in tons. And the other one is discipline's the foundation upon which all success is built. Lack of discipline inevitably leads to failure. So the discipline in your trading plan is the biggest one that we need to master and what we have to conquer. You've got to be really disciplined. Like I've said, it's too easy to take every trade that comes your way, but you only really should be concentrating on maybe a couple of strategies. You know, or if you're going to take every one, you need to separate your accounts out and use different ones for different strategies. That's the way I would approach it, but just do one or two. Right, so we are into just after 9 o'clock. Yeah, so what I'm going to do is I'm just going to jot these names down. So we've got Simon. In fact, I've got a copy of the chat and it's recorded. Yeah, so what I'll do is all the people who've asked for that compounding spreadsheet, I'll send it out to you. And what I'll do is I'll just do a quick video, which you can view about it, which you can do. I'll just quickly run through the spreadsheet. I'll do a quick video explaining about it and how it works. And then you can obviously take it from there. I'll certainly do that. Right. So Well, after 9 o'clock, we've got 50 minutes now till the markets are open. So I'll just run through the news now. I'm not going to go through any harmonic scans or anything like that. We'll leave that until 8 a.m. when David Kahn is on. That is 8 a.m. UK time. That will be 3 a.m. Eastern Standard Time when David's on, followed by Paul Turner at 9. And then after that, we have Sarah Olney at 1 p.m. UK time. And then followed by that, we have Sharon Parkinson, who will be on at 2. And then you will have me at 7 p.m. UK time. And again, the theme on my particular live sessions, what I do Monday to Thursday will be, I use mainly the harmonic scanner, and from that we will be looking at BYOB and 25 to life, and they will be, I won't be looking at any 15-minute ones. I'll only be looking at on the 1 hour time frame and higher, because it's 7 p.m. There's people who are at work all day in the UK who maybe can pick up on some of them trades and maybe set them up and stuff like that, and get the alerts and the limit, the pending orders in and things like that. So I'll be looking at that, maybe longer term ones, which we'll be going for on my session. The scalping, the BYOB scalping in 15-minute time frames and stuff like that, I'm going to leave that to the other people who do the live sessions. All right, so if you want to do longer term trades and maybe stay in them for maybe a day and stuff like that, or a couple of days or a week even, maybe longer, depending on the time frame, where you can maybe get anything from 10, 20 pips up to 150, 200 and things like that. That's the sort of things we'll be looking at. And of course, you could only stay in one trade and make your 15%, easily your 10 pips a day just off one trade by staying in one trade for a week. All right, so that's what I'll be doing. So we'll just go through the news here. There's some G20 meetings going on here. I don't know whether that will affect it, but there will be some news coming out from that. So that may well affect all currencies which are involved in G20, which are the 20 industrialized nations. But you see, yeah, it's got the G7 nations in. So you've got Canada, which is Canadian dollar. We've got Japan, which is Japanese yen. And of course, you've got UK and the US, which is GBP and the US dollar, respectively. So these could well have an impact on currencies. So they've said, yeah, due to meet about a range of global economy issues, economic issues, including the impact of coronavirus in Riyadh, where it's taking place at the minute. So this could have an impact on prices on currencies. So we need to take that into account. It says Sunday, day 2. So you may find that some of the currencies that are involved in this will open with a gap, depending on what they've decided and what they've said and stuff like that. So tonight, 9:45, in just over 30 minutes, it says on here, we've got some New Zealand dollar news. Red flag and orange. And then tomorrow, mentioned before, Japanese yen is a bank holiday, so you might find that that is pretty slow moving throughout Monday. And then we've got red flag 9 a.m. on the euro Monday. I'm just looking to see if there's anything else. Tuesday, US dollar. Wednesday, maybe Australian dollar, New Zealand dollar, well, US dollar, sorry, but the orange crude oil inventories doesn't really have too much of an impact on there. I've never seen any big, massive movements in the market off that. You maybe get a 10, 15 pip swing. It's not really that much. We've got New Zealand dollar Thursday along with Australian dollar, red flag, so that will be quite important. Got some orange flag news. US dollar on Thursday, and then Friday the only one is CAD. So any CAD pairs, I would say red flag news on Friday. That could well have a decent move on it. And the other one we use, of course, is my FX book. Sometimes these are a little bit different in their news. Sometimes they have different flags on ours. So it's always worth checking both of them. So I won't go through it. I've already been through it once, but it's always worth checking on here. If you look at February the 27th, they've got red flag news there on US dollar, Feb 27. And on here, it's orange flag. All right. So you really need to check them both. It's red flag on this one. So do check them both. And we've got some red flag there on Japanese yen, which isn't on here. Feb 27. It's not on here. So yeah, so there is a difference between the two. So do check them both, do use them both, and just be aware that what's orange flag or yellow flag on one may well be orange or red on another, and vice versa. So do use both of them to check, just to be on the safe side. Particularly if you're going to be doing trades and stuff like that, 25 to life and things like that with anything, just take into account that this may well have an impact on your trades. And one last thing I want to mention before I go is 5 p.m. Eastern Standard Time and 10 p.m. UK time. I'm not sure what the times are in the elsewhere, but the markets technically close at those times, and what happens is the brokers tend to adjust their spreads, and they also do their swaps. So if you've got a trade open before that time and you still have it open during that time, you will be charged, or you could well get some credit on the currency pair depending on the swaps. Now if you want to learn about swaps, there's plenty of videos out there on YouTube. Just type in the search bar on YouTube Forex swaps, and there'll be videos on there which will explain how that works. But it's basically all about the different currency rates and interest charged. And you may find if you've ever held a trade overnight, you might find that you've got some, you might have some credit added to that currency, or you may well have been charged as well. Now the spreads as well tend to adjust, particularly on the GBP pairs and things like that. You may find if you hold them, if you've got a 10 pip stop loss, that might not be enough on some of them, because some of them have been known to go to 25 pips and things like that during that particular hour while they do their broker spread adjustments and things like that. So just be aware of that. If you're not in a trade, wait till it's finished. So wait till 6 p.m. Eastern Standard or 11 p.m. UK time.
Les, if you're already in a trade and you're getting a large spread, how long does that large spread normally last? Did you say an hour?
Yeah.
Okay, thank you.
Yeah, I would say it's an hour. To me, you've got a choice. If you're in profit, I would probably just close it out, take your profit, or if it's a longer term trade, if you're in it, if you're going for more pips, you should have a decent size stop loss on that, but maybe adjust it slightly. Your stop loss, it's the only time I would recommend you do it during that. If you want to hold on to a trade, I mean, 20, 30 pips stop loss should cover it for most of the currencies. I've never seen it go any past that. So that would cover it, most of them anyway. If you're in profit and you've moved your stop loss to break even, maybe just make sure that there's enough distance between your break even and your profit. But it does move, and it can move quite rapidly, quite quickly. It's quite volatile. It starts jumping up and down. If you look on a chart and maybe look at the GBP pairs at 10 p.m. if you're in the UK, you maybe see some big long wicks on them going up and going down, and maybe a small body, small body on the candle. You know, that you'll get that sort of thing, and that's basically down to brokers adjusting their spreads. So you need to be aware of that as well if you do it. But most of the trades on my session, what I do, they'll be, you know, they'll probably not trigger till after 11 p.m. GMT or 6 p.m. Eastern Standard Time, or maybe later. That's normally in the early hours. It's normally during the Asian session, and sometimes the Asian session, the range it moves is quite narrow, so you may well find that they probably don't trigger till maybe 6, 7 in the morning. So that's just speaking from my experience when you're looking at these trades. A lot of them can just hang about and just consolidate, you know, during that session. So you know, you maybe find 5-10 pip movements either way, but nothing too great, unless there is some news and things like that, particularly on Aussie dollar. I think that tends to move quite a bit. All right, but that's it for now, guys. I'm not going to look at the scanner or anything like that. I'm not going to look at any trades now. But all I'm going to say is everything I've gone through there tonight, just bear all that in mind. Get yourself some sort of trading plan, what you're going to do. Stick to your 1 or 2 strategies. Don't go mad. You don't have to take every trade that comes your way. But they're there to help you. What everybody does. John Doherty does a fantastic job. If you want to follow trades, if you haven't got time to do your own analysis, follow John's trades, because he's doing that analysis for you, and he's really, really good at it. I'm not saying don't follow him, but maybe just have a separate account for that. Don't use the same accounts for all these different strategies, because you will find that you will lose track of them. You will find that you over leverage. You will find that you're risking more than what you should, and you'll eventually lose money on that particular account. So that's probably the best advice I can give you for that, right? So just to finish, all the ones who've asked for the compounding spreadsheet, where you can draw a wage out of it, if you like, where you can pay yourself first every week, I'll send that out to you via Messenger. I'll just put a link in, I'll send that to you, and then what I'll do is I'll follow that up with a short training video. It'll only be a 2 or 3 minute video just showing you how that works, with a brief explanation. So that's it from me, everybody. I just want to thank you all for joining us tonight. I do appreciate you joining. I know it's a Sunday, and I know it's the last day of the weekend, but you know, the markets are opening very, very soon. So let's just follow the strategies, what we've been taught, and let's all make some pips and enjoy our success together, and we'll have a fantastic time, I'm sure. You know, don't get greedy, get rid of the fear of missing out, stay disciplined, keep within your targets, keep within your 2%, your 3%, and then just stop for the day, go for a walk, go and do something else. If you're not working, you know, go and do something totally different, get away from your PC, and just try not to take any extra trades, and you'll find that your bank and your account will grow a lot quicker than what it would if you take every trade that comes your way. All right, so thanks very much, guys.
Cheers, guys. Thanks a lot, mate. Appreciate it.
I will see you all tomorrow, hopefully.
Cheers,
Cheers, Les. Have a good weekend, mate.
Thanks for joining.
Thanks, Les.